Hello, everybody. Welcome to today's webinar, Soaring Towards $167 Billion. TBR projects key trends in cloud. Excuse me. I'm Justin Surgeon, and I'm hosting today's session. Today's webinar will be presented by Cloud Senior Analyst Jillian Freeman, Cloud Analyst Kelsey Mason, and Research Analyst Molly Gallaher Boddy. The presentation will share insights found in our public cloud benchmark and customer report. If you'd like to learn more about this research, please reach out to myself or one of the analysts after the presentation. Now, before we begin, there are a few items I'd like to cover. First, I will be recording today's session and posting it on our YouTube site, TBR channel. I encourage you to visit this channel to watch this presentation or any of the previous presentations we've posted. Second, I'll be following up with all of you via email tomorrow afternoon with the link for today's recording as well as with the slides from today's presentation, so be on the lookout for that. Finally, we welcome questions on the material we're presenting today. Please send any questions you have to the Q&A function, and we will address as many as we can at the end of the presentation. Now, with that, I'd like to hand this over to our analyst today.
Great. Thanks, Justin. Thank you all for joining us. So we wanted to kick off the presentation looking at the market forecast and some drivers and changes that will affect us going forward. It's been a huge week, or 2 weeks in cloud. We have HP getting out of the public cloud market. And while this wasn't a huge surprise to the analyst community, it is a big deal for HP they've invested billions in Helion, but to really shift focus to where they're making more money and have a greater opportunity in private cloud, hybrid cloud, professional services, and broker and cloud. HP, as well as other vendors like Dell getting out of public cloud, Verizon and some of the telco vendors shifting strategies away from public cloud. That presents a lot more opportunity for the guys staying in public cloud, so AWS, Google, Microsoft, IBM. The next big thing that happened in the week was Oracle getting into public cloud as a service. Now, they've had this service for quite a while, but it's been only available to Oracle applications and platform customers. We think they're getting into public cloud for a couple of different reasons. First being, they were leaving money on the table. So in today's market, most of the customers, they don't want an all Oracle or an all single vendor stack. They want to mix and match best of breed applications, and they want to run them on various types of infrastructure. So for Oracle, offering infrastructure beyond just Oracle customers, it opens up a big opportunity for them, as well as offering it through partners. So it partnered with Accenture earlier in the year around its cloud business, so it can be brought into a lot more deals outside of, again, a small subsegment of customers who just want an Oracle stack. Another thing that happened at the end of last week was the spin-out of Virtustream. We've all been talking about Dell acquiring EMC, and that's a huge shakeup in the market. But more recently, VMware and EMC paired their cloud assets to roll out Virtustream. This will have VMware vCloud Air, EMC's cloud storage, and Virtustream's infrastructure as a service and management software. Now, I think from a branding point of view, this was a great move. vCloud Air hasn't really been meeting expectations, and EMC is more of an arms dealer for cloud. Dell is more of a broker. So by combining and spinning out these assets, 50% owned by EMC, 50% by by VMware. I think it'll shake up the market a bit. I've heard of Virtustream more often in the private cloud space, but I do think they have an opportunity to gain some traction. And lastly, towards the end of last week, AWS announced their earnings. They grew an astounding 78% year over year. This is up from growth in the 40s earlier in the year. But what I think is even more impressive is their 25% operating margin. This not only proves that cloud and public cloud infrastructure as a service is a viable business market, but it also just shows the dominance of AWS and what public cloud, what types of profit they can generate at scale. Now, they're improving their operating margins for a couple of different reasons. Being an at-scale vendor, they're able to segment certain portions of their servers to only run the same service. They have thousands of services, so by segmenting the different servers, they create efficiencies. Some of these efficiencies they pass on to the customers in terms of price cuts, but the others go to the bottom line. And the other reason I think Amazon is increasing, or AWS is able to increase its operating profits is due to decreasing go-to-market costs. So the market is much more readily accepting public cloud and accepting Amazon, even more so than a year ago, as well as a lot of the partnerships with CS&I vendors. Accenture will help it increase its margin even more, as well as some of its brokering partnerships. So some of these things are going to drive an inflection point starting in 2016. Similar to what we're seeing with Amazon, I think the whole market will increase its growth rate. Now, it's already a huge market. We think it'll generate about $80 billion just this year, and up to $167 billion by 2020. I think the growth is going to begin increasing next year, due, again, to CS&I partnerships, brokerage, and the market's general acceptance of public cloud. Now to go into a couple of the market drivers and changes. There's a lot going around with geo, and I think this will really help shape some more winners outside of the traditional players. The U.S. is seeing a lot of the born-on-the-cloud players dominate. Salesforce, Workday, Amazon, Google. These vendors are seeing rapid adoption in the U.S., and much of that is to do with them being U.S. vendors and the U.S. in general being more accepting to new types of IT. Europe is seeing more of the traditional now cloud vendors take off. So IBM, Microsoft, SAP, they're doing very, very well in Europe. Part of this is due to their presence in the region already, as well as Europe's trust with local C&SI partners. APAC is seeing local vendors do very well. Alibaba, Tencent, HiChina, they're all according to our latest public cloud adoption study, these guys are just dominating the infrastructure as a service market. The U.S. vendors have built data centers and partnerships in China, but I don't think they're really meeting expectations up until now. They'll continue investing in the region, but it's just slower due to regulations as well as the success of these local competitors. There's a lot of opportunity for an even broader range of local vendors on the infrastructure side, and also for network vendors who are also cloud vendors to connect multinationals and improve SLAs globally. Overall, the leaders are all expanding beyond their core markets by investing in global data centers, channels, and startup communities. Most recently, India has been a high area of investment. IBM, Microsoft, Amazon, Google, they've all invested in data centers in the country, as well as promoting the startup communities. And lastly, Alibaba, who's doing very well in China and APAC, they opened a data center in Silicon Valley and are expanding in the U.S. through channels. Industry is another prime trend we're seeing, industry customization. Salesforce launched Salesforce Financial Cloud and Health Cloud this quarter. Workday added healthcare functionality, and a lot of the other U.S. vendors are customizing either certain applications or partner channels or other go-to-market initiatives to get into industries. I think this trend is happening in the U.S. first because it's the most saturated market. Things will be rolled out here and then eventually spread globally. The developer community, another big area of investment that will drive change. Startup communities, tools, added security, opening APIs, adding API managers. We've seen a lot of investment here over the last probably 2.5 years. That's because both in across SaaS, PaaS infrastructure, getting those developers is going to be core to growing the ecosystem and really embedding each vendor's technology inside of enterprise and startup communities. This community, the developer community, is growing in importance, and I think we're going to see a lot more investment coming in 2016. Professional and managed services, another big area in 2015 that's only going to continue to grow. The age of the do-it-yourself cloud is over. We've been talking about that trend for a couple of years. And the demand for greater services, and this is services across the board, consulting, integration, app development, managed services. We're seeing a huge demand for all of these different types of services as the enterprise community moves into cloud. Startups don't necessarily need these, but the enterprise community, it's complex, and they just need a lot more hand-holding. And lastly, security, governance, and compliance. Demand for these certifications and investment in these areas is again growing as the enterprise gets into cloud, as industries get into cloud, especially healthcare, finance, public sector, as well as certain geos. We've seen a lot of investment in German data centers, for example, and a lot of the Chinese investments due to increased regulatory requirements. So now that we've discussed a few of the macro trends, we'll take a deeper look into a couple of key areas of interest in the quarter. We'll look at the revenue and revenue growth leaders. This is a mix of born-in-the-cloud vendors as well as traditional vendors. They're all expanding their portfolios, integrating with each other, and partnering with C&Si and brokers. What's super interesting about this quarter is that the largest vendors are also the fastest growing vendors, and we'll dive a little deeper into that. The second topic we'll discuss is security. So security is a top decision-making factor when moving to public cloud, but the reasons for doing this might be a little surprising. Now, security has been a barrier to move for years, but now we're seeing security is also a driver as well. Lastly, we'll discuss future opportunities and trends. ERP is one of the slower moving workloads to cloud given all of its complexities, but an opportunity here does exist. It's a more longer term opportunity, and there's a few vendors really vying for the top spot. And gamification. So for a SaaS vendor to be successful, they really need to drive low-cost renewals. To get a low-cost renewal, you need to drive usage, which drives better stats and overall acceptance of an application. So vendors are using gamification tools either through partners or acquisitions to add these capabilities into their applications to drive usage. Here's a snapshot of the public cloud market in 2Q15. The y-axis is public cloud growth, the x-axis is corporate growth, and the size of the bubble is the volume of public cloud revenue. So what we're seeing here, and this is just the top vendors. We have 48 vendors in this benchmark. This is showing, say, the top 10 to 15. So this even more so is showing the leaders of the leading category. And it indicates that the market is at a certain stage of maturity where the leaders are really starting to dominate. For a while, there wasn't a clear leader group. Amazon and Salesforce were there in terms of revenue, but it was kind of changing year over year. I think at this point, the guys highlighted here are truly dominating, and that's indicated by even faster growth. This really is atypical for the market at this point. Typically, as the quarterly revenue gets this big, so in this quarter it's around $2 billion for companies like Microsoft and Amazon, growth will start to slow down. In some of the pure play vendors, Salesforce, ServiceNow, Workday, they still have very impressive growth rates, but even those companies, they were growing, as the volume of revenue gets bigger, growth naturally slows. Amazon and Microsoft are really defying this. With Amazon, their momentum paired with continued investments in portfolio, partners, ecosystem, and geo, they're just continuing to grow extremely quickly. And again, similar to what we discussed on the last slide, I think they're at an inflection point where growth is actually increasing, and it's going to increase as they get more into the enterprise. A lot of Amazon's revenue right now is still with the startup community and the SMBs, and these segments are critical, but one enterprise deal could be the equivalent of 1,000 startups. So it just shows just how important those deals are for companies like Amazon. Microsoft, it's done a great job converting Office customers to O365. That's where the majority of their cloud revenue is today. But they also are leading in PaaS and infrastructure. So they've done a great job in the ecosystem development as well as expanding geographically. Microsoft is in a unique position because the majority of their customer base, they've been very happy with Microsoft, and they're willing to try Azure ahead of going to competitors. Now, this is a bit different than SAP and Oracle, who some of their customers have had not the greatest implementation or experience with the older legacy applications. So those customers are more willing to look outside, although SAP and Oracle have competing cloud, low-cost solutions. So Microsoft is very lucky in that sense. IBM and SAP, they've acquired their way into the cloud. They have strong enterprise presence and a well-built-out channel, and they're very strong in different industries. So they have rolled cloud into their portfolio quite gracefully and are now leading in this space. And again, those are two of the vendors that for a few years they were on the cusp, they were growing, but now I think they are truly in that leader spot. Google is a little behind in enterprise adoption, but they are growing. Most recently, again, last week, they announced a deal to go after Microsoft, whereas Microsoft, they're moving Office customers to O365. Google is actually offering Office customers who still have a few years left on their contract. They're giving them Google for Work for free and also giving partners $25 a head to help implement the solution. So Google is really trying to take share there. This slide shows just how expansive public cloud gets when it gets into your IT environment. The graph depicts that out of the public cloud adopters, how much of their applications, in this case CRM, marketing, productivity, and HR, are moving on to public cloud versus private and on-prem. So I think it's interesting that these applications here, they're very essential but non-core applications. So if something were to happen, the company won't shut down. And the vendors here, they've strategically picked these workloads to help migrate customers to cloud. So Salesforce went after one of the earliest moving workloads, CRM, but then you also have SAP and IBM. IBM getting into new categories it wasn't previously in through cloud, and once customers are moving to cloud, it just expands. These workloads, although some of them aren't the highest adopted overall, they have the highest percentage of the workload running in a public cloud. And lastly, this highlights partnerships, acquisitions, and really the broader ecosystem of cloud. And we made this graph look a little bit crazy on purpose. These are all recent, so in the last 3-4 months, all different things that have happened. Accenture rolled out a business unit with Amazon. That will be huge, again, for getting Amazon into the enterprise. They've also launched a business unit with Oracle, PaaS and SaaS. They support S4HANA, SAP S4HANA, and they acquired Cloud Sherpas, which is an SI vendor for Salesforce, ServiceNow, and Google. Similarly, Workday and IBM partnered. IBM acquired a Workday SI firm, Meteorix. KPMG acquired Workday firm Aon Hewitt. A Workday firm, and Aon Hewitt and Mercer also acquired Workday systems integration firms. SAP integrated SuccessFactors with IBM Connexa. It also integrated Lumira with Google for Work. Salesforce and Microsoft, two of the biggest rivals, have really cemented their partnership over the last quarter. HP is now brokering Amazon and Microsoft. They were going head-to-head with them just last week. And Rackspace announced managed services for Amazon, Adobe, Google, among others. And CSC acquired Fruition, which is a ServiceNow C&SI partner. So, as you see, there's a ton of stuff going on in the partner and brokerage landscape. Customers are demanding that all of these solutions work together. They want a best-of-breed stack. And as the enterprise adopts cloud, it's critical that they get the consulting, the integration, and the ongoing management that they require. And with that, I will hand it over to Molly to talk about security.
Thanks, Jill. So we're going to move now into a discussion of security's effect on public cloud adoption and the biggest issues that we see here at TBR around public cloud security. TBR recently published a 2015 cloud security study, so I'll be drawing from insights from that study as well as the ones that Jill has already talked about. Overall, TBR believes that security continues to be a top factor in cloud decision-making. Even though, as Jill mentioned a few minutes ago, security is a barrier to some users when considering public cloud adoption, you're going to notice through the next couple of slides that there's an increasingly positive perception of public cloud security by some of our respondents as well. So if we move to slide 9, we can see that both third-party managed security providers as well as security options through typical cloud service providers are very popular ways in which end users are going to meet their security needs. Customers definitely want solid security built in to their packages from their cloud service providers, but we also found that they're willing to search out specific services. And these specific services can fill particular gaps, whether these are industry-specific gaps or other types of problems with compliance that they need to fill. Security, we could say, has a complex effect on cloud adoption because of this. It exercises both a negative and a positive effect on cloud purchasing, depending on who you're talking to. As you're going to see throughout this slide, security acts as both a barrier and a driver of cloud purchasing. So it's a top decision making factor either way. If you turn to the graph on the right, you'll see that security is actually the most important factor in cloud decision making based on our research here at TBR. And it exceeds even very practical concerns, such as those around total cost of ownership. Given this customer focus on cloud security, we believe there's two opposing trends that are happening simultaneously as the market matures. The first is that security will continue to be a barrier for some who are hesitant to move to public cloud, and they see single tenancy and other aspects of private cloud as being more secure. But on the other hand, more and more users are becoming convinced that public cloud has good enough built-in security that they are willing to adopt it. As the cloud adoption market becomes more mature, quick return on investment, basic security built into public cloud solutions, and also the growing flexibility of hybrid cloud solutions are the sorts of things that customers take as baseline expectations. They expect to receive this when they move to cloud. So because of this, our research suggests that there's a growing focus on security and a growing expectation that cloud services providers are going to include all necessary basic security within their packages. And as I said earlier, for anything that doesn't fall under that baseline expectation and is sort of a more particular or industry-specific need, users are going to turn to third-party solutions to make public cloud a viable option for them. If we move to slide 10, slide 10, I want to explore this idea of the growing acceptance of public cloud a little bit more and explain some reasons why we think this is taking place. TBR's cloud security study shows that there's a growing perception of both private and public clouds as secure. I think it's important to note that public cloud continues to have more hurdles around security than does private cloud, which is something that we would expect to see. But if you look at this graph, we did find that 49% of the market believes public cloud is just as or more secure than private cloud. And had we asked these questions 2 years ago, we don't think we would have got the same responses. So public cloud is definitely having an improved perception as time goes on. Private cloud users in general are more concerned about security to begin with, and enterprises would need to be entirely convinced of public cloud security if they're willing to move. However, we believe that perceptions are changing because public cloud is increasingly accessible and has increasing security built in. More and more of IT budgets are going towards public cloud when compared to what's going towards private cloud. And I think this larger point gets back to what I was saying on the previous slide. As cloud matures, security is becoming a customer expectation, and for some companies, as you'll see in a moment, it's almost table stakes. Cloud service providers are expected to offer enough security as part of their cloud packages, and from our study, we believe that some of the basic things that customers expect to see in these packages are network-based advanced threat protection and identity and access management. With public cloud becoming more and more accessible, there's an important opportunity for network providers like Verizon, CenturyLink to jump in and include these kind of basic security features in their offerings. The other reason we think that perception of public cloud as more secure is changing has to do with hybrid adoption. Hybrid IT in general is becoming an increasingly viable option, and that means that public cloud may be part of a larger roadmap for IT. It's not a choice of just public, it's public and other types of cloud and on-premise resources. So this means that companies may choose to move certain types of less compliance-heavy workloads to a public cloud while keeping others in their own data center. In terms of what this changing perception of public cloud security might mean for vendors in the future, we think the next step is really going to focus around compliance and industry-specific clouds. To name one example, Salesforce unveiled a new health cloud in preview in September. This is a patient relationship platform, and it centralizes patient communication and personal data so that patients can receive care between multiple providers. Salesforce also announced Heroku Private Spaces, which brings Heroku's developer platform on premises and includes a regions feature. So what this does is it allows enterprises to run applications out of a regionally specific Salesforce data center, and this might help them deal with compliance and regulation issues. So with public cloud, as more and more providers make applications that are industry-specific, we're going to see compliance and regulation, heavily regulated industries like healthcare, financial services, becoming kind of the next frontier of public cloud adoption. The second thing that we envision seeing in the future is a roll-up of cloud security pure plays into larger companies. This trend is actually already starting. During the quarter, we saw Microsoft acquire add-ons, an Israel-based cloud security vendor that will allow Microsoft to offer security as a service. We think that add-ons technology is going to become part of Azure, and that this cloud roll-up, taking these small startups, is going to continue in the future. And if we move finally to slide 11, we can see that the changing perceptions of public cloud security create new opportunities for both cloud service providers as well as third parties offering managed services and additional, more customizable, maybe industry-specific add-ons. As the market matures, the customers are going to trust cloud providers more, and they're also going to trust third-party vendors more. So here there's really an opportunity for everyone to be part of this larger shift. I want to start by talking about the expectations and opportunities for cloud service providers. One of the important things to note is that IT departments and line of business buyers are both more savvy and more involved in cloud purchasing choices. So with this comes a rising expectation for cloud service providers. Cloud users expect to achieve return on investment in less time, and they also expect that cloud security is going to be part of what they're purchasing. TBR believes that cloud service providers that provide clients with additional managed security services, an example here would be Dell or IBM, have a large opportunity to grow their business. If you look at this graph, 43% of respondents indicate that they solve security concerns by purchasing additional security services from their cloud providers. So the companies that have really broad cloud portfolios that span public, private, hybrid, and also companies that have security arms are going to become increasingly important as customers want to buy everything security related from a single vendor. And if they can, they will do so. However, that said, if you look at the second bar, there's also an important gap here that third-party vendors can fill. Third-party solutions are actually a close second option here, coming in with 42% of those that TBR surveyed. And we believe that this indicates a huge opportunity for both brokers and SIs to offer managed security services. One recent example that we're seeing comes from Rackspace. During the quarter, Rackspace released a managed security and compliance assistance offering, and this is for smaller enterprises that are already paying for Rackspace services. It's a managed security offering which the company calls end-to-end. So this means that companies will be willing to turn to third parties so that they really don't have to worry about taking security in-house or buying from a bigger provider. If there's a gap to fill, in this case, for small businesses, they will turn to third-party providers to fill it. The other thing we wanted to note is that partnerships are also going to be key in helping clients get the security services that they require. Jill mentioned at the beginning of the webinar the Accenture and AWS business unit that was recently formed, and we actually believe a big part of this has to do with meeting security challenges around public cloud and allowing people who might otherwise not move to AWS's public cloud to do so because they're going to be consulted on meeting their particular security needs. So overall, we would see that less and less enterprises are looking to in-house security solutions, and they are willing to take public cloud as more and more secure, and this has to do with both their cloud service providers and increasing trust in third-party solutions. So with that, I'll hand it over to Kelsey, and she'll take you through some public cloud opportunities and trends.
Thanks, Molly. So now that Jill and Molly have talked a bit about what the current state of the market is, I want to move on to discussing some future opportunities and trends that we've identified, most notably in regards to ERP adoption and gamification. So if we move to the next slide, I'll talk a bit about the opportunity we see around ERP migration and the role that C&SI firms can play in that. So from our public cloud customer study, which is actually going to publish in a couple weeks, we found that ERP is the least adopted public cloud applications workload, and that it actually has the lowest responses in terms of planned future adoption. We think that this has a lot to do with the fact that while manufacturing firms are arguably the largest consumers of ERP, and they are often early adopters of technology, that early adoption has probably created some pretty messy internal IT environments. These environments are extremely complex to migrate and are often a barrier to adoption with ERP workloads. So while looking at this graph on the left here, while the future in ERP doesn't look too bright, these responses indicate near-term plans, I think within the last year, or within the next year. And so we think that in the next 5 years or so, ERP adoption will really start to pick up. And I think what's interesting about the ERP space right now is that traditional vendors and pure play vendors are kind of squeezing the market from both ends. So although traditional vendors such as SAP and Oracle lead the market, there's increasing pressure from these pure play public cloud vendors, pure plays like NetSuite or Rootstock. They've done a really good job so far in gaining adoption of SMBs and mid-market customers. However, taking NetSuite as an example, NetSuite wants to move upstream and they want to tackle the large enterprise space. And I will say they are seeing some traction there, but I think the issue here is that pure plays may not be seen as enterprise ready, and they often lack the services expertise in-house around migration or implementation or even road mapping to move some of these large-scale customers to the cloud. So this is one space I think we've identified that we see as an opportunity for the consulting and systems integration firms. As I mentioned, ERP environments are often very messy and come with a lot of customization. This isn't something that the smaller vendors or arguably even the traditional vendors like SAP or Oracle are really equipped to handle on their own. So we believe that targeted partnerships between ERP vendors and these C&SI firms will be mutually beneficial for both parties mentioned as well as for the customers. And just stepping back, by targeted partnerships, I mean one specifically around ERP. So think similar to what we've seen recently around HCM. I know IBM, maybe a few quarters ago, a year ago now, had set up a consulting practice around Workday, despite having their own HCM public cloud offering themselves. And then as Jill mentioned, we've been seeing vendors or services firms acquiring practices around pure play HCM vendors. So I think that ERP partnerships similar to those HCM ones, will be the next wave. And so coming back to the point I made earlier about the vendors kind of squeezing the market from both ends, I talked about pure plays moving upstream as one side of it, but the other side of that is that since these pure plays are being effective in moving up market, the traditional vendors like SAP and Oracle are feeling pressured to expand their revenue opportunities, and thus are trying to move down market. The issue that we've seen, though, is that these vendors are looked at as large enterprise vendors, and the perception is, whether it's true or not, is that either these vendors are too complex to work with in terms of contracts, or that they have products that are more complex than what some of these smaller customers actually need, regardless of whether they message and sell SMB-focused solutions or not. The perception is just off. And taking that to another level, I think many of the small customers don't even consider these large vendors when they're evaluating potential ERP solutions. So there's another opportunity here for those SI firms to come in and help traditional vendors change their perception, not talking about the big SI firms like Accenture or Deloitte, but some of the more boutique ones or the mid-market SI firms can come in and at least get these larger vendors' names into the conversations with SMB or mid-market customers. So just to sum up this slide quickly, though there are many opportunities for vendors to move outside their core customer segments and attack the ERP market from all angles, the reality is that customers are slow to move ERP to the cloud. And there is an opportunity for these C&SI firms to come in and help ERP vendors down the road, both in terms of migration expertise and in terms of distribution. So now I'll move on to the next trend we have, which is gamification. And just as a little bit of background, when we talk about gamification, we're talking about when game-like features are embedded into applications, and these features are meant to encourage healthy competition between coworkers and incent employees to increase usage of applications through rewards, which can be anything from badges to points to some sort of leveling up system. And vendors are embedding these features into CRM to accelerate sales initiatives, or HCM to increase engagement in training exercises, as just a couple examples to kind of set the stage here. And as a little bit of a selfish plug, I'm actually doing a thought leadership piece on this within the next month or so, and we'll be launching a survey to gain more insight, hopefully next week. So I should have some more data to validate some of my thoughts today, but for now, I'm just kind of going to lay out some of the assumptions we have around gamification and the reasoning behind it and why we think it's increasingly important to include these types of features in enterprise applications. So I think the driving force behind the need for gamification is really that more millennials are entering the workforce. And I think the line, I'm a millennial, I'll speak for myself here, I think the line for us between work and personal time is constantly blurred. And so meaning we really take no issue with logging onto social media like Facebook at work, but at the same time, we also have no problem taking work home with us after 5 o'clock. And so that's kind of one aspect of it. And then, and this is my assumption, but I think that millennials also need to be incentivized a little bit differently than generations past. We kind of view work as something we want to be fun, especially if it's something we're going to have to take home with us after 5 o'clock. And incentives that help make that a reality, I think, are more motivating to us. And gamification seems to be an effective way of addressing both these characteristics of millennials. So there's kind of two aspects to look at here around why gamification is important: the customer and then the vendor perspective. So from the customer perspective, meaning the perspective of the company that's kind of challenged with incenting millennials to use enterprise applications like CRM or HCM, gamification really can help increase that usage. And taking that a step further, these companies want their employees to be using business applications because that's the way they get the data that's needed to make big company-wide decisions. And this data drives analytics that can help with those decisions. So the more people that are using these applications, the better and more comprehensive that data becomes. And then from the vendor perspective, embedding gamification will increase usage and stickiness of their portfolios. Since cloud applications are often priced per user per month, getting the number of seats is important to driving revenue, and embedding gamification can help ensure that usage is kept at, the highest levels. And at this point, we've seen kind of a lot of activity in the gamification space from some of the enterprise vendors. For example, and I think the biggest one is that Microsoft acquired CRM gamification vendor Incent Games in August. And they plan to integrate their gamification platform called Fantasy Sales Team into CRM Online. Fantasy Sales Team kind of takes traditional gamification a step further by enabling users to team up with, draft, and trade their peers, similar to the concept of fantasy sports. And then SAP is taking a little bit different approach by making the HANA Cloud Platform gamification service publicly available on the HANA Cloud Platform. And this service enables developers to actually build gamification concepts into their own applications. So what we're expecting to see is these developers start to sell gamification add-ons through SAP's App Center Marketplace to generate revenues similar to the gamification section that Salesforce actually has on their own App Exchange. And then finally, similar to Microsoft's acquisition, I'm kind of expecting there's going to be some more acquisition activity in the gamification space. There are a few pure plays competing that I think would make good acquisition targets. One example being a vendor called Bunchball, which is a cloud-based pure play that offers Nitro, which is a gamification platform that can be deployed as an add-on to enterprise applications. Bunchball already provides direct integrations with Salesforce, SAP Jam, and Jive, among a few other applications. So I'm kind of thinking that Bunchball could be acquired by Salesforce or SAP in the future, as integration already exists, and these vendors will benefit from the increased stickiness that comes with embedding that in their enterprise applications. So on that note, I think we can open it to questions.
All right, thank you. So just a reminder, any questions you have, please send through the Q&A function. We prefer that over the chat function just because it's easier for us here to sort through them. So, all right, I know we had a couple of questions that have come in so far. Let me scroll up to these. All right, so the first question, can you discuss the importance of vendors' hybrid capabilities in the offerings in an enterprise, selecting a vendor for public cloud, and comment on the relative prospects for success of IBM, Amazon, and Microsoft?
Sure. So I think for an enterprise looking to incorporate a hybrid environment or migrate to a hybrid IT environment, they're going to look at quite a number of things. The breadth of portfolio is, you're right, it is essential. In our hybrid adoption study, we're seeing vendors with the broadest portfolios like an IBM, an HP, a Microsoft. They're doing very well there because they give you different options, and the capabilities will more natively be integrated. You'll also have, those companies also have a broad C&SI ecosystem, as well as their own internal C&SIs. Well, with Microsoft, it's with Accenture through Avanade. So the breadth of the portfolio is important. That being said, I think when it comes to public cloud adoption, the breadth of the portfolio and the hybrid capabilities is probably the least important than in looking to a private cloud or the overall hybrid IT. I think the reason I say that is because the public vendors doing very well in public cloud, like Amazon and Salesforce, Google to an extent, Microsoft Azure was initially just public cloud. they all are now becoming brokered through both IT vendors like the HPs and the Dells of the world, as well as the C&Sls. So while the hybrid capabilities are important, I mean, you see it just with Amazon. They have a virtual private connect where they'll connect an Amazon cloud physically to a data center. At reInvent, they launched EC2 dedicated host, which essentially they're not going to tell you it's private cloud, but it's a fully dedicated, isolated server that is private cloud that you can host a traditional licensed database on. So the public cloud vendors are doing this. Salesforce, Google, I wouldn't be shocked if a deal was big enough if they allowed someone to run their software on a private cloud. But in general, out of the different types of clouds, I'd say with the ecosystem growing for a public cloud vendor, it's important, but it's less important than when looking at a private environment.
All right. Let's see. Another couple of questions came in here. All right. Next question. AWS and Microsoft seem to have the magic touch in cloud and look like they will dominate for many years to come. What will happen to tiny vendors like Workday and Zoho?
Sure. So I think we're looking at a couple of different spaces here. Microsoft, Azure, and Amazon, they are doing very well in the public cloud infrastructure and platform space. And yes, they are dominating there, followed by IBM in the enterprise and Google in more of the smaller, more of the startup and SMB community. Now, other vendors like Zoho and Workday, they're applications vendors, so their market is going to be a little bit smaller since they're just focused on, well, for Workday, HR, getting into ERP, and Zoho on productivity and CRM. So it's different markets. They're both very horizontal, so opportunity is big, but I think for Amazon and Microsoft, they'll stay horizontal for quite a while, but with Workday and Zoho, they'll start customizing around verticals. We're already seeing that happen, as well as expanding into geos to grow their market. I think they'll still continue to do well. In terms of tiny vendors in the infrastructure as a service space, I think we're going to see those vendors continue to either specialize in something such as big data or an open source community or geo, or they're just going to get rolled into the larger vendors.
All right. Let's see. The question came in here. What are some other examples of cloud security roll-ups, and why do you think this trend will continue?
Sure. Thanks, Justin. Well, we see a lot of large multi-line vendors attempting to offer more comprehensive security, and one of the ways they're doing this is by buying up smaller security firms, and this is especially true of SaaS, pure plays. So in the deck, we briefly discussed Microsoft and the add-on acquisition, and interestingly, this is the last in several security buy-ups by Microsoft. This week, they also announced, or we saw in the news, that it's likely they're going to acquire Secure Islands, which is, in fact, a SaaS security startup. And this one is document-oriented, so it checks documents for certain key security information. And actually, Microsoft purchased Arado last year as well, and that's a firewall-related security roll-up. So Microsoft, that's definitely one of the ways they're going after security is through acquisitions. There's a couple other companies recently that also made security acquisitions. We saw Cisco and Landcope this week, CA and Exedium, which is cloud identity management, and I think that was last quarter. And also last year, IBM bought Lighthouse Security Group. I think, too, with these security app vendors, the pure plays, they're potential targets for the larger companies. So a couple to maybe watch, Sky High Networks, which is SaaS security, and a company called Netscope, and that's a cloud security app vendor. They offer security for like popular applications.
All right. Another question came in here. Do you find customers wanting to put all their eggs in one cloud basket, or are they comfortable buying different services from different cloud providers?
Sure. Well, we're seeing kind of a divergence in the market here. While there are quite a lot of vendors looking to one vendor to offer both on-prem and cloud solutions, so IBM, HP is doing well there. We're seeing for the most part, or I think the most part, customers are very comfortable mixing different applications. They're demanding that this is happening, so I think the more they demand, the more companies are opening APIs, they're pre-building integrations. There are third-party companies like MuleSoft that build connectors. There's a bunch of these popping up. We have an integration and brokerage benchmark that highlights just how well they're doing and the leaders in the space there. So I think we're going to see more and more of that, as well as professional services. There's a ton of opportunity in manually integrating these services themselves. So whether it be different infrastructures or combining applications, integrating everything is key. It has to happen for customers to really get what they need out of cloud. It's needed to run the analytics to increase visibility. So while there is something to be said for those large hybrid environments that are a single vendor that are pre-integrated, the more customer demand we're seeing, the more investment in making it extremely easy to connect different applications and run different applications on different infrastructures. I think we're going to continue to see that.
All right, I think we have time for one last question here. I noticed that NetSuite is third on slide 13. What do you see? Do you see them staying third, getting surpassed by someone lower, or perhaps challenging SAP and Oracle?
Sure, so I'll take this one. So on the graphs that were shown on that slide, it's important to note, I think, that is North American large enterprise adoption. So I think that's one of the reasons we're seeing such overwhelming leadership from SAP and Oracle. So if we're taking it in that context, I think NetSuite, if they're going to surpass Oracle and SAP, I think it's going to be in a few years. Like I said, I'm not expecting public cloud ERP adoption to really take off in a large way for another, I don't know, 3 to 5 or so years. So, and NetSuite largely plays in the mid-market right now. They're, like I said, trying to move upstream, but that's proving a little bit challenging, I think, for them. So in the near term, I see them sitting at number 3 in the long term, maybe surpassing Oracle, and then probably having a little bit harder of a fight with SAP. And looking at the other vendors below NetSuite on that list, I don't think any of those vendors are really positioned to pass them at this point.
All right, so I think that's all we have for our time today, and as well as questions that have come in. And if there is anything we didn't get to, we will follow up with you after the presentation. I'd like to thank Jill, Kelsey, and Molly for their time today, and thank you everyone for your attendance and for sending in your questions. You can follow our analysts as well as TBR on social media on the last slide listed here. Please check out our pages on YouTube and SlideShare for our previously aired webinars. I would like to remind you all that I'll be following up with you all via email tomorrow afternoon with the recording link to today's presentation, as well as with the slides, so be on the lookout for that. We'll leave the chat function open for another minute or so for anyone to ask any last-minute questions. Otherwise, have a great afternoon, and thanks for your attendance.